We are delighted to host this event on the FINDEX 2022 report. It was released in 2022, and it contains an update of the FINDEX database till 2021. We have with us Leora Klapper, who is the co-author of this report, along with the team. And as you know, the FINDEX database is something which covers around 130 countries and has rare information on financial inclusion on a set of over 1,000 variables. So this is the best database which exists globally to sort of compare about the FINDEX database. Now, we are delighted that Deputy Governor of the Reserve Bank of India, Mr. T. Rabi Sankar, who needs no introduction, is here to sort of chair this, this event and also give his keynote address. So Mr. Rabi Sankar, as you know, looks after the payment systems also among several other portfolios he has in the Reserve Bank of India. And I'm mentioning payment system essentially because this FINDEX report is about leveraging the digital technology in some ways. And this is different from the earlier two FINDEX reports in the focus that it has put the digital financial inclusion on the forefront. So we'll be very keenly looking forward to Mr. Rabi Sankar's views. He has promised to sort of not give you a prepared sort of a text, but he's willing to interact and he is willing to give his thoughts on this occasion. Apart from that, we have Mr. Dilip Asbe, who is known as the person who has helped cause he heads the NPCI. As you all know, India is known for retail payment revolution, and NPCI has actually delivered that and is virtually envy for every country in some sense because of the effectiveness of the Indian retail payment system. We have with us Chandra Shekhar Ghosh, who is the Managing Director and CEO of the Bandhan Bank. And Bandhan Bank had a lot of journey, essentially starting on the financial inclusion front. It has set up an NGO called the Bandhan Konagar, and now it is a universal bank separate from the universal banking. And what we have is he will share his experience as well. So this is a rich panel here, and I will request Mr. T. Rabi Sankar to first give his thoughts for the keynote, and then we will go for the rest of the program. Over to you. As you wish, that would be nicer.
Good afternoon. Dr. Klapper, Dr. Saggar, Mr. Ghosh, Mr. Asbe, ladies and gentlemen. It's a pleasure to be here in NCAER this afternoon. A special word of gratitude to Mridul for insisting and showing the patience to drag me here. I was here just last week, so I was thinking coming to Delhi in this weather more than once a month is a bit of an ordeal. But then I couldn't say no to Mridul. Before I start off, since I have a flight, I'll try and be there throughout, but since I have a flight to catch, in case I'm pressed for time, I might have to leave a little early. I seek my apologies in advance. The loss will be entirely mine. Global FINDEX database has always been, as Mridul said, perhaps the most comprehensive database on financial inclusion. Its coverage in terms of countries, its coverage in terms of variables, its coverage in terms of indicators, its coverage in terms of time is unparalleled. So that is the document that most of us look to if we really want to understand or find information about financial inclusion anywhere. And the latest version, the 2021 version, which Mridul said came out in 2022, is no different. It is as comprehensive as the earlier ones. Kudos to the authors for bringing out such a detailed document. It documents all global trends, global reports with sufficient detail in country-wide micro factors that go into financial inclusion and, in this case, digital payments. In particular, I think what the theme that appeals to me in this report or this database is that it very clearly shows how digital payments, digital technology can make us reach or make us achieve financial inclusion, higher and higher levels of financial inclusion, that much more easily, that much more effectively, that much more efficiently. I had a look at the report, and some of the basic data that comes out of the report clearly indicates that digitization or digitalization, whichever word you prefer, is proceeding apace globally. Some countries are doing better, some countries are not, but as a category, whether it's developed economies or it is developing economies, digitization in the sphere of payments particularly is growing at a stupendous rate. The basics for digital payments is essentially having an electronic or digital account. The first thing that is brought out in the report is that the number of formal accounts has doubled in terms of adults to 76% over the last 10 years. Now that doubling in 10 years, given the level of digital awareness, given the level of, let's say, technology savvy in various emerging economies and developing economies is a great achievement. And the fact that 57% have made digital payments from these accounts, in other words, these accounts are not just lying idle. There are, of course, other data points which says that they can be used more. But a large part of these accounts are used for digital payments, either receiving or giving out payments. And this number has gone up from roughly, I think, about 35% in the last 2014. I think it says so last about 7 years. So, which again is a clear indication of the digital growth that we are making. A point that comes out very clearly is that a large number of accounts have been opened, about I think 40%, 39 or 40% of these accounts have been opened on account to facilitate government payments. Now that is an important point, that comes out. While personally, while I was aware the role that government can play in universalizing formal financial accounts or bank accounts, this report clearly brings out that it can actually play a pivotal role in it. Now we know that, in a sense, we in India know that the Bandhan Yojana that we have, under which roughly about 460 odd million accounts have been opened so far, and the fact that most fiscal transfers are made into these accounts, probably India has a lot of contribution to make to these very high numbers. But this is something that not only we have to learn and try and maximize the payments, government payments through these accounts, but globally there is a learning point here. As far as the coverage of India is concerned, it reinforces the sense of achievement in our efforts that we have made, that government has made, that Reserve Bank has made, in the initiative that the private sector has shown, whether it is startups or technology firms or banks or non-bank payment system operators. It reinforces the fact that we are proceeding in the right direction. Especially the jump in the digital payments during the pandemic actually, makes that a dividing point. There is a before and after in pandemic there's a before pandemic and after pandemic in terms of the use and popularity of digital payments. I think the report tells us that about 800 million people, now, that's more than 60% of the population, about 800 million people made their first digital transaction during the pandemic period. The report also reminds us that there is the task ahead is still massive. It is still stupendous. While our growth has been impressive, what we have to achieve is clearly brought out in the report. Globally, the report says about 1.4 billion adults are unbanked. And I was having a look at the distribution across a map, and the largest circle was banked right in the middle of India. 17% of the adults here are still not banked, and that is the largest in terms of percentages. So there is some task for us ahead. The interesting data I saw, of which I had no idea, was the gender distribution. While there is no gender gap in terms of account ownership, there is a huge 17% gender gap in terms of using those accounts for digital payments. Now, there is a learning somewhere here. This is the data that we need to look at. This is the data that we need to understand the policy implications of, and this is the data that we need to use going forward to bridge this gender gap. Briefly, at the Reserve Bank, we focus on digital payments in a fairly systematic manner. We have periodic vision documents that come out. They have started coming out from the early parts of 2000s. We bring them out every 3 or 4 years. The idea is that this document not only conveys the objectives and the tasks that Reserve Bank has set for itself in the next 3 or 4 years, it also provides clarity to all the stakeholders. And given the fact that we depend immensely on the private sector, on the initiative of the private sector in developing products, in innovating products, and in generating businesses that would enable us to achieve our policy objective, while the private sector obviously achieves its own objective of whatever profit maximization, which is exactly as it should be. That clarity, I believe, is provided in these vision documents. There is a national strategy for financial inclusion. Many of you would have seen it, given the context here. Both the documents put together basically talk about RBI's objectives, its strategy, and its policy tools for financial inclusion. I will start with a brief account of how far we have come in terms of digital payments. Over the last roughly 5 years, calendar years 2017 to 2021, digital payments in volume terms have grown at about 44% per annum. In value terms, they have grown slower at about 6% per annum. Daily transactions have grown from about 40 million at the beginning of 2017 per day to 290 million on last count, that is for August 2022. So that's more than a 7-fold increase in the number of transactions every day. A large part of this is obviously contributed by UPI and its popularity. That's a topic most of you will be familiar with. That's probably an app most of you who are here are already using, so I won't get much into that. But that number has gone up, and this is captured in the Digital Payments Index that we have. We started it. Base was 2018 March, which was 100, and now as per March 2022, that number is 349. So that's an increase of about 250%. Simultaneously, the Financial Payments Index, these indexes have been developed by the Reserve Bank to give us a sense of where we stand, what lies ahead, and over time probably learn to refine these indexes so that others can also follow it if it's useful. The financial inclusion index stands at 56.4 in March 22 compared to 2017. It was 43.4. So there has been an increase there. That number reaching 100 means perfect financial inclusion, 100%. Reserve Bank also undertakes benchmarking studies of various indicators of digital payments. We have done it once. We have recently put out the second report. As per the second report, India is a leader. By leader, we mean placed either at 1, 2, 3 at the top. India is a leader in 15 out of 40 indicators that are there. So that is why, apart from the fact that it's something we have brought out, that, gives us clear visibility of what are the targets that we need to focus on and where do we need to move to achieve, achieve a goal of, a goal of a fairly efficient digital payments ecosystem that is accessible to all. As you know, India is one of the few countries where the RTGS system is 24/7. The NEFT system has also been made 24/7. This has, made a big contribution. Apart from the fact that these payments are available 24/7 and throughout the year, it has made a big difference to, in collateral areas. For example, it has enabled Indian banks to operate globally and settle immediately. Now that facility, simultaneously with financial market regulatory initiatives like accessing NDF markets outside or allowing non-residents to access domestic market makers, the availability of the payment of the RTGS system has greatly facilitated that. It has greatly facilitated government payments during, I remember during the pandemic. In one day, we made payments that normally without digital would have taken probably months to achieve. So, it has enabled those direct benefit transfers of the government. It has also, one of the factors that goes under the carpet is that it has substantially reduced the settlement risk in the financial system, where we used to have 2 or 3 or 4 settlements, and all these settlements underlie either UPI or NEFT or any other payment system. While I send money to, money to my friend, the money reaches immediately. The settlement doesn't happen immediately, and the settlement or settlement finality happens when the banks transfer the money to each other, and that transfer is reflected in central bank money. In other words, it takes place in the RBI books. Now, these settlements happen periodically, and the longer is the time gap for these settlements, the bigger is the settlement risk in the system, and therefore having more settlements, which was made possible by RTGS 24/7, that risk has gone down. Other areas are, of course, bill payments. There are about 20,000 billers who are registered on the Bharat bill payment system. Recently, we have announced, and probably Dilip can give you an update on that even non-resident Indians will be able to pay their bills from outside on this system. There are, about 7 million POS machines, POS machines, and roughly about 200 million, QR codes have been installed. Roughly about 14 million of these have been covered under the Payment Infrastructure Development Fund, which is a sort of subsidy to facilitate entities to set these up, targeting, among others, let's say street vendors, even in the metros. So that that payment infrastructure is in place. There are about 1.6 billion prepaid instruments that have been issued. So overall, the numbers clearly indicate that we are progressing well. We are progressing in a reasonably satisfactory manner. I will go forward to see what are the other things that, what are the things that are missing, what are the things that we will need to focus on. But before that, this growth has been made possible because of various factors. First is, of course, the role that government has played. The fundamental requirements, the basic requirements of digital payments is 1, a device, 2, you need a bank account, 3, you need identity or authentication, and 4, you need connectivity. Now, the first 3 of these, bank accounts, cell phones, or mobile phones, or identity, are all taken care of by the government in perhaps a system that is unparalleled anywhere in the world. We call it the JAM, Trinity, Bandhan, Aadhaar, Mobile, but the role that it has played is something that can never be undermined. In this, and government is already making huge efforts to ensure that there is universal connectivity. So in terms of basic requirements for payment systems, government has put those things in place. In addition, of course, is the Payment and Settlement Systems Act, which was introduced in 2007. That provides a firm legislative base for Indian payments and settlements. So providing the legal basis, giving the basic infrastructure in terms of account identity has been taken care of by the government. On its part, RBI has sought to introduce a regulatory framework that creates and reinforces the enablers. Those were the basic requirements, accounts, mobile, etc. The enablers are interoperability, security, cost efficiency, and digital literacy. So RBI's efforts over the years has been to ensure that these enablers all are strengthened throughout the system. To begin with, RBI has, like in many other areas that RBI has done, whether it's agricultural finance, or whether it is, whether it is financial markets, RBI has, throughout its history, been creating institutions that have played a transforming role in their respective areas. In the area of technology, in the financial system, it has been no different. The first to come up was the IDRBT, which is the Institute for Development and Research in Banking Technology, followed soon after there by the Clearing Corporation of India Limited, and after that by the National Payments Corporation of India, NPCI. We all know the success that it has had. There are other organizations, not as visible perhaps, like IFTAS or Rebit, which have also played an important role. So one of the things RBI does is create an institutional framework that takes care of the basic dissemination or basic spread of the enablers that would keep a digital payment system up. To enhance security, which is the other thing of the digital payments, which is an important factor insofar as it can draw people who are suspicious of technology, who are suspicious of digital transactions, to bring them into the fold of digital payments. RBI has taken some important measures. The first that comes to mind is the two-factor authentication, which probably has played the most important role in improving our confidence and reducing the misuse of this system. Notwithstanding this, other problems do take place. There are social engineering and other types of frauds that happen, but those numbers are, in relative terms, well under control. Those numbers are quite low. Realizing the role that technology plays in this, RBI has again taken initiatives. For example, setting up the Reserve Bank of India Innovation Hub, doing cohorts under the regulatory sandbox mechanism, and taking steps like the hackathon. We recently had a hackathon earlier this year, whose results were announced, and some of the solutions that have come up in that hackathon, and I believe some of them are already being implemented, are mind-boggling. So the basic idea is that in India, we have the willingness of the government, we have created the ecosystem, we have a regulator who is also looking at development, but quite importantly, we also have a private sector, technology firm, startup ecosystem, which is willing and which has the skill and which has the drive and the creativity to provide products, to provide solutions to various use cases of social importance in a manner that it meets their requirements, it meets society's requirements. India's economy, as all of you know, is largely bank-led. So banks are right in the forefront of digital payments as well. You know, like I'm fond of saying, I've told that in other places, that a digital transaction essentially is basically a movement of money from one bank account to the other. So it is not possible to, at least, not the way the financial architecture has evolved, it is not possible to have a payment system without banks playing a major role. But at the same time, while banks are at the forefront of this digital payments infrastructure, we have also tried to develop non-bank payment system operators, which have played a great role. If you look at UPI, more than 80% of those transactions are accounted for by just 2 entities. Now, it has other issues like concentration and how to address that. But but apart from that, that role and the role that a large number of payment system operators have played in giving out wallets and coming up with solutions has been one of the major factors that has bridged the gap between what banks provided and the last mile, which can reach customers which are outside the pale of banking. Significant spread of banking habit and digital payments notwithstanding, as the report has flagged, there are certain challenges that we would need to address. One of the key findings of the report is that the large section of the unbanked population in India now has bank accounts, but a significant proportion of these are of inactive status. Now, as per the report, in India, the distance to financial institutions, the lack of trust, lack of money, or the lack of need to do a transaction were commonly cited reasons. Now, this gives us information that we can use. We were aware of these challenges. We are looking at identifying some of them and mitigate this problem of inactive accounts, how to bring them into the fold of digital payments. Apart from banks themselves, the banking correspondent arrangement we have, or the self-help groups that we have that have evolved can play a major role. We are trying to leverage on them. We also recognize that another way of dealing with that is coming up with innovative solutions. Reserve Bank of India Reserve Bank Innovation Hub had recently undertaken a competition to look at solutions. It was an internal thing to look at solutions that can meet the problem, that can solve the financial problems faced by women from economically weaker sections. And some of the solutions that have come out there are quite significant. Quite recently, very recently, the RBI Innovation Hub has come up with a KCC loan solution along with RBI, which will actually make it, probably completely change the way that these KCC loans are given to farmers. A process which would have taken weeks, if not months, obtaining a loan on KCC. Under this system, we have so far done pilots, can be done in less than 10 minutes. What it requires is, of course, access to land records, access to cash flows, access to much of data that's there in many states, but that's not easily accessible, easily usable in some states. So we are trying to do it in a couple of states to begin with. Depending on its success, it can be extended. We look at that as changing the access to credit, not just of the farmer, but every user or every customer, whether it's a business or an individual in the rural sector. Another finding of the report that struck me was that large number of adults in South Asia, including India, are unbanked but have a mobile phone. Now, this is an interesting piece of statistics. 51% unbanked adults in India have a mobile phone. They don't have a bank account, but they have a cell phone. Now, this is both a challenge and an opportunity. The report also talks about the use of mobile accounts in Africa and how that can play a key role. But then what we have to look at here is, can we leverage the fact that those who are unbanked, half of them have a cell phone and can actually access the digital ecosystem? One way to do that is to ensure, and this is something that we have been working on for quite some time. Another factor is that of the mobile phones that people have in India, a fairly large number, I think roughly about 400 million or more, are feature phones. They are not smartphones. So UPI, as it is commonly used, cannot be used on a feature phone, could not be used on a feature phone. So with the, with the efforts of NPCI and with the efforts of, many private sector startups, etc., some of these have come up through the regulatory sandbox that we conducted. Some of them have come up through the, through the competitions that have been conducted by RBI or IDRBT or NPCI. But they have come up with solutions that, that can be used to ensure that UPI can be used as efficiently on a feature phone. There are many solutions. I think there were 3 to begin with. More are getting added over time. Whether it is interactive voice recorder or, whether it is high-tech solutions like proximity sound-based solutions, using sound that is emitted by the systems to confirm, authenticate transactions. There are many such solutions that have come up. I think over time, as more and more of these feature phone users start using these systems, there is a simple one which which I call a missed call solution. Missed call is typically Indian. You give a call and then hang up so that you don't have to pay for the call. The other guy calls back. So that that is what is used here. You give a missed call to the merchant calls back, authentication happens and transaction happens. So other such, probably Dilip can throw more light on that. But there are many such solutions that have come up that will address this issue of entities who have a cell phone but don't have a bank account. While the efforts to bring them into the banking fold will continue, but this is something that could give us a solution in the interim or on its own. Another piece of data that the report brings out is that about 70% of account owners did not make a single digital payment in the period under review. Now, we fully appreciate that having a bank account is essentially a necessary condition. It's not a sufficient condition. However, it is also true that many digital apps that dot the landscape are not universal in reach. That not all of them can be reached. Apart from the solutions that I discussed that NPCI has come up for feature phones, there are other steps that we are taking to ensure that these people would also get covered, and digital payments development and regulatory efforts can focus on areas where it is not popular, areas where its use is sparse. One of the things that we are trying to do is basically, get this geo-tagging of digital transactions, which will enable us, it will actually tell us, what is the geographical spread across districts, across cities, across towns. That will help us focus our effort in areas where digital payments have not reached. We try to improve digital awareness through our various programs, the eBath programs and other awareness programs. We have a payment infrastructure development fund under which we have roughly about 1,000 crores now, which can be used to incentivize through subsidizing some sort of an infrastructure, whether it is POS machines or QR codes. So all these steps are also augmenting the efforts that are taken technologically to enable transactions by these entities that do not actually have bank accounts. One of the issues that comes up, and this is something that we need to keep in mind, that the fact that digitalization is growing at this rapid pace and the fact that we have such a large population makes India extremely data rich. Now, we do know that data can provide us solutions. Recently I was in a conference where one of the things, many large corporates discussed with me is how can they access UPI data? How can they access UPI data? Because that will give information which can be used to structure products that can be specifically targeted at specific cohorts of the population. So being data rich is obviously a boon in the sense that new products can develop, but at the same time, being data rich also increases the responsibility on the government and the regulator and virtually all participants. Two things, accessing data across one's activities affects privacy, all of us know that. The second thing is data means money, data can be monetized, therefore data is significant to business, which is fine, which is as it should be. But at the same time, we will have to have regulations in place, primarily have laws in place, followed by regulations in place, which ensures that customer data is not only safe, that customers' privacy is not only protected, but the monetization of customer data is done in a responsible manner. It is done in a manner where the customer is aware, where the customer has some level of consent, some level of comfort with the use of that customer's data. I think I'll stop there. Just one other aspect that we at the Reserve Bank, we are a full-service central bank. It's not just not just payment systems or financial inclusion. We do these things across. We do regulation, we do supervision, we do many other functions. For all these functions, we realize that the future lies in technology. We need to focus on technology. We also need to ensure two things. We need to ensure that the technology ecosystem that we have understands what our priorities are. We need to ensure that we need to understand what the requirements of the technology ecosystem is. To ensure that this happens, we have recently set up a specific department targeted just at this function. We have set up a FinTech department whose basic job is to interact with all the technology, startups, etc., the entire ecosystem, understand what's happening there, identify trends, see what trends are useful for what purpose, whether it's regulation, supervision, inclusion, or whatever, and ensure that those technologies are given a fair chance to develop and evolve. So, we expect that given the fact that the future lies in technology, this initiative in particular will ensure that Reserve Bank's focus lies on addressing social problems like inclusion, as this report highlights, through the use of technology. Thank you.
Thank you, Ravi. Deputy Governor gave such a wonderful exposition, synthesizing the FINDEX report and the RBI initiatives and policies. I think that showed a tremendous grasp of the issues involved. And I will depart from my usual pattern of what we had conceived for the program and request Leora to speak for 2-3 minutes, reacting to his observations on FINDEX and how Reserve Bank is responding to various challenges in this regard. And after that, we'll open the floor for Q&A. And I think my colleagues are waiting to give you some flowers. Would you just wait for 2 minutes, let Leora do?
Collecting data in over 120 countries over a calendar year is a huge and exhausting undertaking. And just seeing that the data is being used and is useful and helpful for governments in developing policy to expand inclusive access to financial services really is inspiring. And so I appreciate your excellent summary of the report. It's helpful for us to understand how the data is being used by governments and very much how the government's recognition, identifying both the tremendous progress that's been made in ownership, and really, I'm an optimist, seeing this as literally the world's greatest financial inclusion opportunity to now create, design, both the public investment in the infrastructure and allowing the private sector to invest and innovate to expand usage of these accounts. Thank you.
you. So maybe...
If I can just, one of the issues that most of us face, in the area of policy is lack of information. We want to introduce a product, we want to take a policy initiative in whichever field. Having enough data about, or having enough information about the experience of other countries, about what others are doing, would probably solve half the problems that we do. It's quite possible that others have tried it and failed, or tried it and succeeded. It is so important that we don't have to invent the wheel. And this is a problem I have faced myself in many areas. I wish I could understand, how this works in other places. In that sense, the report that you have given, and I'm sure you will continue with that report, and I'm sure many offshoots of this research on this will come out in the days to come. This gives us a compendium, a sort of encyclopedia that we can refer to in the area of inclusion using digitization. Thank you. It's an extremely useful report.
Would you take a few questions from the floor, if it's okay? Yeah, okay.
Yeah, let's keep it to these areas, yes.
Anybody wants to ask any questions to the Deputy Governor? I think they're not really into it. Okay, yeah, please.
Yeah, go ahead.
Yes, sir. Thank you so much for your remarks on the FINDEX as well as the digital payments, the way it's evolving in India. It's been in the news recently about the UPI being a sort of a public good. Just wanted to sort of hear your reactions on it as well. A lot of digital payments is built on the fact that the merchant digitizations are free, MDR is not charged. How is it likely to pan out for the ecosystem if there is no money involved in the game?
That's a question that's easy for me to answer. Because we have asked the same question to the system. We have put it out in the recent charges document. There are views on either side. We have put that out along with everything else that is charged in the financial system, whether it's UPI, whether it's RTGS, NEFT, anything. And all the charges that go into it, we want to look at it comprehensively just to understand, and where required, use it for policy purposes. So, let's wait, let's see, what the system feels, and then, use it the way it should be used.
Okay.
Hi, sir. Good afternoon. Pavan Bakshi from the Gates Foundation. You mentioned a question about the role of gender and the usage by gender is pretty low. There's a huge gap in usage of the accounts as well as payment systems and stuff like that. So I think we've studied that a little bit. I think the first step is, do we have data which is split up by gender? It doesn't seem to exist today. So I think if we start with that, we might have a way to address that. So I just wanted to understand from you that, is RBI looking at anything to accelerate the I think splitting up of the data and making it available to the organizations and researchers and NGOs on the ground to be able to act on it?
No, the point, as I said in my talk, this was information to me. I wasn't aware of it. And information like this will actually enable more effective, more targeted policy measures or regulatory measures. So I understand that. And, while the World Bank report, this is a report that covers more than 120 countries. They cannot go into the level of details that we need to if we have to focus our efforts on India. So that is left to us. I think we will have to look at how such information can actually be taken out, given the fact that the report also talks about the benefits of women, for example, having bank accounts. how it improves the outcome for families. So given that, it is of policy significant, and therefore we need to make efforts to get relevant data out in the place, in the first place. If it's data that Reserve Bank, generates, or the surveys, etc., Reserve Bank mobilizes that data, then like every other data that Reserve Bank, collects, it's available in the public domain. That will also be available, I presume. But that's an area more work needs to be done in the country.
So if I can add, I think some efforts have begun in that direction from the Reserve Bank. The banks are beginning to supply some information. I remember Governor Das and myself had a discussion with Queen Maxima on this issue in 2019, and it is being sort of followed up with the banks. But the data is not in a position where we can meaningfully disseminate at this juncture. So I think it will take a while. I think we can sort of move in that direction and stuff, but it's worthwhile. Something.
One data can be indicate on that the microcredit have been raised in the women 100%, and each women from the one family. In that sense, now is a 6.5 crores family raised, which is the 25% of the total family of India raised by microcredit. If I add on that a self-help group and other the women who are in the rich people, if we add on that, I hope that the data which is showing on that 35% adult, I hope that it will be like to more than that.
So if we look at that higher number, we might not get to the real results. I think what we need to do is understand it better, that how do women have control and agency on the money if they are being issued that loan. So I'll just stop there. We can talk about it later. Thanks.
Thanks. So I think we can request for the, okay, some more is coming up.
Hi, sir. Sapna
Yeah,
from,
please.
Sapna here from CNBC. So just two quick questions. At the juncture at which we are right now, what would be the 3 top challenges for Reserve Bank of India, basically in terms of your digital ecosystem and your payment system? That's one. Very broad question. 3 top challenges for the regulator. And number 2, sir, you just mentioned that corporates have been asking for access to UPI data. So something more on that, sir. How, I mean, this has been for quite some time. What's a recent phenomena, and then how do you plan to look at it? Thank you, sir.
Yeah, that sounds more like I'm writing a test, top 3 challenges. No, it's not really top 3. One of the things I mentioned was that, given the data that the report shows, it has to be, made available, it has to spread to the population that currently doesn't have access to a smartphone and therefore is partly deprived. We have started efforts in that, in that direction. But, giving it to entities that do not have, a smartphone, that is one. The second effort is ensuring that connectivity exists, or simultaneously ensuring that offline payments can happen. That has many use cases, whether it is in transport or any other area. That is, that is one area that we are targeting. That's an area that we have to ensure happens. In terms of customer security, ensuring that frauds are minimized, ensuring that, the effect of social engineering and, data theft, etc., are minimized, is something that we'll have to focus on, because going forward, given the important role that technology has, the biggest challenge any entity will face, and this is not just financial entity or bank or a corporate, then, the major challenge anyone will face is cyber security. We all need to invest in it. We all need to develop systems that will enable us to identify and if something happens, how quickly you react, you sort of recover from it. those efforts have to continue. There are many more, but since you asked me 3, I'll stop here. And the other one was, can you just repeat the second question you asked? Yeah, but no, customers are not asking access. Corporates are asking access. Now, obviously, data and technology are the 2 largest determinants of corporate strategies or corporate products, especially in the field of payments. And in many other fields. So more the data you have, the more detailed the data you have, the more useful it is to structure products and so on. So yes, it is useful. But like I said, while data is useful for business, we also have to simultaneously ensure data safety and data privacy. You would be aware of the data localization rules that we have had. That most people have put in place systems which ensures that data is localized in India. Similar initiatives in terms of ensuring that the data available is safe, data available is secure, and that monetization of data is done in a responsible manner. Thank you.
Thank you, Sudesh. I think for the panel, we have some flowers from the NCAER side, and maybe this is the best occasion. The entire panel is here. Whoever wants to take a photograph can take a photograph. Okay, so this has been a great insight on financial inclusion through the digital means. So I think what we'll do now is to straight away go for the panel discussion, and then we will request Leora to sort of make a presentation. So basically, let me, before that, thank Deputy Governor T. Rabi Sankar for his insights. And we have already discussed the FINDEX report. I think coming from Deputy Governor, the insights were tremendous, and the Indian context was very much there. So this sets the stage for the theme of the panel discussion, which is challenges and opportunities for leveraging digital technology for financial inclusion in India. There are global insights from the FINDEX. We will have more of it later. But let me now welcome the panel. And I think this panel is a great composition on the theme we are discussing. The panel needs no introduction, as I've basically, the profiles were contained are in e-invites, as well as you all know them all through and through, given the media coverage they get. What we'll do is we'll quickly go through around 40 minutes of discussion and keeping 15 minutes for short Q&A. And let me begin with Leora. So from your FINDEX database, where it gives an international comparison of 130 countries, where would you place India in terms of the hierarchy? Now, most of us here think that we have leapfrogged in financial inclusion. Is that correct? Or are there clear areas of weakness that we need to address? How much of India's success is out of leveraging digital technology for financial inclusion? And how much from the Prime Minister's Jan Dhan Yojana, which initially at least focused on opening bank accounts, but now has a much wider gamut? So over to you, Leora.
Thank you for the question. So we don't rank countries because financial inclusion is too multifaceted. and the too many indicators. But I will say that India is now on par at about 80% of adults with an account, on par with other large developing economies like China, Brazil, and South Africa. But India does lag in usage of accounts. A large number of inactive accounts, large number of accounts with not a single deposit or withdrawal or digital payment in the past year. And that's actually in part because of the legacy of the accounts being open. In countries like Kenya and China, the accounts were opened in order to make payments. So in China, between 2014, around 2014, there's a surge in account ownership in order to open Alipay WhatsApp accounts. In Kenya, accounts were opened in order to make P2P payments through M-Pesa accounts. Whereas, excuse me, the JDY accounts, which did leverage technology, which leveraged the digital Aadhaar numbers, were not opened initially for the purpose of P2P payments. But what we are seeing now is with the introduction of India Stack, UPI, Paytm, and other products, is the opportunities are steps in the right direction. And so, really the challenge now is the adoption of digital payments, as well as, I always say the most important payment is a payment to oneself. I'll talk a little bit about the relatively low savings rates in India, the relatively low financial resilience that people report. So encouraging payments, not only domestic payments to family and friends, payments to businesses, but also potentially payments to oneself in the form of savings.
So, when I see the data in close terms, then India had almost like 2,255 million bank deposit accounts at the end March of 2020. That's what the RBI data tells me. And when I look at your FINDEX database, it says 10% of the estimated 15 years and above population has mobile accounts. Now that translates to 103.5 million, just 103 million, say, of the mobile accounts. So if one sees the ratio of money accounts to the ratio of the bank accounts, it is the money account, the mobile account holders are just 4.6% of the bank accounts. So are we sort of missing out here something, or we need to scale up the digital financial inclusion here, or is it just the nature of this thing?
So without my pen and paper, first of all, I'd start by normalizing it by active accounts. When we do that, it doubles, right? Second, mobile money accounts are still relatively nascent in the market. But they have huge potential, especially among younger adults. And we see this in sub-Saharan Africa, for example, and also in the gender dimension, where we see significant gender gaps in most sub-Saharan African countries in bank accounts, but we typically see no gender gap among mobile money accounts, especially among younger adults. And so, as the market, so people, what's also notable with India is around the world, we see, on average, I'll get to it in my presentation, only about 3% of adults having inactive accounts. Accounts are expensive. Most adults have an account because they have a reason to have one, whether it's to accept a payment because of the convenience of making payments. And once the ecosystem in India develops, where people will want an account, will need an account, then you will see, then it's also because mobile money accounts are often more accessible and affordable and convenient, especially in rural areas, we will see potentially a growth in these type of accounts, fintech accounts.
Thank you. Maybe Deputy Governor can feel free to correct us at any point of time, though we are basically discussing among the panel. But Dilip, what is your reaction to Leora's comments here? Do you think that we need to link the digital part of the financial inclusion better with the PMJDY? PMJD has anyway focused on bank account opening. Once you open a bank account, what can we do from the retail payment system side You know, you revolutionized the retail payment from the NPCI side. But how can we use that to leverage digital technology for financial inclusion? If you think of Jandhan Aadhaar Mobile, the JAM Trinity, that has worked wonderfully for bank account opening as such, because Aadhaar is there. But is mobile banking really working? Do we extend any credits out of it? Or is it just some money which is there on the mobile?
So I think we need to be a little bit more patient, right? I think that's what I personally think, because the digital journey, it's a journey undertaken by the customer based on his choice, literacy, confidence, trust in the digital payment system. And basis the RBI's design principle to offer the retail payment systems back to the customers. Today, when the PMJDY program was launched, it was not just an account opening. It was decided like a complete program which government also looked at, building up the unique Aadhaar mapper, right? Which is every bank account which was opened was linked to the Aadhaar. So which helped the government to avoid leakages and avoid get the transparency in getting the large number of DBT to the account. Similarly, when the money was there in the account, the basic cash in, cash out needs, the Aadhaar enabled payment system was launched, and many customers even today are relying back on an assisted mode. So I think today, looking at the choice of self-service transaction processing or assisted mode, I think that's a journey which we'll have to undertake, right? And we'll talk about the experience, the customer experience part in a while, because that's very important when you want to actually make the customer self-service, the digital, using the technology to make the transactions by himself or herself. And the third part is government also linked up some of the social security schemes like accidental insurance, the health insurance. So PMJDY that way was a composite story, which is the end-to-end story. Obviously, many more, many such actions are still work in progress. And when you look at today, the technology, especially when you talk about the technology has to keep on improving, right? Otherwise, it will start decaying, right? That's a standard way we look at it. And we keep on improving the technologies. And this is where customer experience is very important. Deputy Governor spoke about the offline transaction. Deputy Governor spoke about the IVR, right? Today, see, the way I personally look at it is when the urban customer using the smartphone and making a transaction using an app, right? And take an example of UPI transaction, it has to be as simple or better when you want to give it to on a feature phone. Unless we make that happen, right? Making the customer move from assisted mode to the self-service mode is going to be very difficult. And for example, I'm just saying that, just making a voice command as send money to Mridul, 100 rupees, and he just authenticates, just punches one number on mobile, right? Using the AI to do the rest of the work, right? To what actually app is doing, right? I think those kind of experiences has to be created. And again, we rely back on the technology, the fintech ecosystem to give that experience. And once those experiences are available, I think that is where you will start seeing the migration to the feature phone or the last mile in the rural areas.
Thanks. I think technology is a great challenge and you have been doing wonderful things. The idea is not to undermine the PMJDY. Obviously, it has delivered something extraordinary. I mean, that's recorded in the Guinness Book as well. So, but there is obviously the issue of the way forward from here, and that's where the technology challenge lies. May I request Mr. Chandra Shekhar Ghosh to give his perception? He has done wonderful on financial inclusion, his bank, his NGO, Bandhan Konagar. They have been instrumental in pushing financial literacy, financial inclusion, especially among the women's group. So what is your opinion on what we need to do more under PMJDY in this respect? direct benefit transfers really helped populate these accounts. So they are no longer moneyless. But account holders are eligible for around 10,000 rupees of overdraft, which is sort of the credit. Now, is that really happening? I mean, do you have hard data to tell us whether your banks, which have the basic bank accounts, people are able to borrow? What is the average borrowing in each account? And can we do something more from the digital technology side on the credit side?
Thank you, given these opportunities. Yes, sir, it is a big opportunities to reach the people, not opening the account by the Dhanajan account, or we are also account opening on that. This is the purpose of government to give the DBT. How customer will be like to aware about it, use that account for their purpose also, for their transaction. So that is the missing on that, how educate to the last mile connectivity. These people will be know that this account is there, and this account they can be use of their own purpose. So this is the one side. So they will be like to regularly transact on that. The last mile connectivity in our country mainly performing by the microfinance institution and couple of bank which is like an us, they are reaching to that level. In the study also mentioned about it, who are financially excluded. Financially excluded in the rural people, women, and the poor people. And these the people, one side is there, if I go to this, the more interior rural, there is in one side, this is a data connectivity is not that much appropriate. That should be like to manage by the government to better way to give, and bandwidth also like to provide it in that way. Second is then awareness continuously making on that to the women level. Then normally maybe the some of the transaction have been showing in here women transaction, but actually it is not done by the women, done by their son or their daughter. So in that sense, it will be number will be come down in the women. Third point is there the financial inclusion account holder, senior citizen. So they are very fear about the transaction of the digital. And they are not accepting any education. When we like to talk more, they are little bit scared about it. No, they will not like to do it. So these are the situation on that. So finally, my feelings on that, if we can be use the channel who are microcredit are doing in the last mile connectivity, all SFB or bank, they can be one session, make it in a monthly basis in the group level, only for financial transaction for digital point of view. And also aware them, whatever the risk in that sense, they will be not like to share their OTP. They will not like to click any of this, whatever they are received in their mobile. That may be like to increase this type of transaction. Final one point I find out on that. The large number of maid servant, driver, and the private tutor, are we can be like to payment by only the digitally? That can be better way we can be reach more people, and those people also will be like to start to digital transaction. That will be help more for the country to financial inclusion. Thank you, sir.
Thank you, Mr. Ghosh. That's very useful to know. I mean, let me go over to Dilip again. You are the technology man.
Can I asking the apology? I have the one.
Yeah, actually,
FM
that's
meeting.
how I sort of preponed this, because he has to meet the finance minister right now.
So sorry I'm
this.
asking my apologies. Thank you, Dance.
So, Dilip, you are the technology man, and I think there's a whole lot of technology revolution going around. So what is your precise insights on what new technologies we can develop in India, we can use in India? You developed a lot. Especially one on the depositing the financial surpluses, that's one issue. On one side, I see there is a process of creative, Schumpeterian creative destruction taking place because conventional banking is getting challenged and there's a lot of competition which is coming up. And would this help financial inclusion, or would this actually work against people who are not so well versed with technology, the poor? So this is a major challenge what we face. And if competition needs to be increased, what should we do? We should allow telecom service providers and e-commerce platforms to provide banking services, or how best can we further regulate the digital banking space, controlling the inherent risks which exist? I mean, the platform finance is now the buzzword. I mean, banking is not able to withstand the pressures which are coming from platform-based finance. From the inclusion part of it and the risk part of it, let us know.
So there is no question that, when you look at the growth areas, the credit appears to be a big growth area for the country like us. And the way we have looked the evolution of the digital payments in the country, whether it's UPI or whether it's any other payments revolution, the unbundling of the customer experience versus the customer owning up the relationship, I think this is one thing which we have done consistently better. So in our assessment, the unbundling using the India Stack protocol, OKN, account aggregator, right? Variety of information can be passed on to the last mile service provider, and basis which the decisions can be taken on credit, no credit, large number of data is being available. But at the same time, we just have to be very mindful. Normally in the financial services, whatever regulator writes, right, we take it as a approval or the permission for the activities to do. And whatever is not written, right, which we simply assume that it is not permitted, right? I think the fintechs, there is a journey for the fintechs to go through this learning. And then that's where number of times you would see some of the accidents also happen, right? Because they try to operate in that gray area typically. And but I think with the collaboration, I think the fintech and banks collaboration is very important tool which can be exercised by the regulators, by the government, so that there is a compliance and risk management, and there is an innovation. So the journey goes actually hand in hand in that particular process. And some of the things which we have delivered, like whether you look at Aadhaar, whether you look at UPI, wherein we had a right amount of collaboration between the banks and non-banks or the fintechs, which actually fueled the growth. And at the same time, I believe in the credit side also, looking at the unbundled OKIN protocol or the account aggregator, wherein the customer continues to have relationship with the regulated entity, right? In terms of that is where money comes from, that is where the compliance and risk management happens. And customer continues to use the front-end app, right, which can be provided by a fintech or a startup from that perspective. So in that sense, there is a need to have the right collaboration, right marriage between the banks and non-banks or fintechs, if you may call so.
But generally, if I ask you very quickly whether you are happy that RBI is creating a right ecosystem, or is there some sort of pluses or some additions they should make in the policies, or some policies they should discontinue? Can you be more frank and specific?
So, sir, I think it's a journey in my assessment, right? While we see that fintechs have started operating in the credit side, and when you look at there is the new co-brand credit card guidelines, right? So the recent digital lending guidelines have recently come in. I think the guidelines will evolve over the period, right? I think there has to be a effort from the ecosystem also to be compliant and start the work. And I think that is the way, the moment the fintechs or the ecosystem wants to have a 180-degree or a 360-degree change at first shot, it is very difficult because it's a complex ecosystem, sir, right? Because finally anything goes wrong, the regulator will have to own it up, right, in that sense. So in that sense, I believe that things are in the right direction, but it may take next few years to reach to the state where we are, as a country, we are looking at. And I think that's a journey we should travel.
Thank you. Leora, how do you view India and China's model of digital financial inclusion? You know, I know it will be very difficult for you to pronounce superiority of one over another. That's not what I'm asking. So I leave it to you if you want to touch upon it. But what are the strengths and weaknesses of these two models? And what is the takeaway each one can take from the other?
So as I mentioned earlier, account ownership and financial inclusion in China was in part driven by the P2P services such as Alipay and WhatsApp. So, my numbers, today 82% of adults in India make a digital merchant payment. So we're buying stuff using a phone or a card, almost universal. In addition, just culturally, China has always had very high formal savings rates. So 44% of adults are using their accounts to save. And these are two very strong use cases that we don't yet see in India. But yeah, I would simply say the fact that 127 million adults in India made their first digital merchant payment, or their first merchant payment or utility payment directly from their account, is a sign of the potential progress to be made in this space. Looking at China, and this is outside of the FINDEX report, but certainly there have been other studies that financial fraud, especially through a phone, is a concern. And I think the lesson and the message that the importance of maintaining trust of a strong and enforced consumer protection framework to ensure trust and usage of the system.
Thank you. Dilip, your views on the same? You think there is something we can fine-tune in the India stack model, especially from the financial inclusion angle? What is the NPCI thinking on more products really on these issues? And especially, I think you did tremendous innovations in terms of certain products which can be used on feature phones. But going from here, do you think we need to go further on the line of making feature phone compatible retail payment models and for financial inclusion products? Or do you think we should make smartphones more cheaper because especially the PLI scheme is incentivizing the smartphones? So should that be the focus or should feature phones be the focus?
So I think let me answer this in two steps. The first question which you asked, in terms of how India has done and what is that we could have done better as far as the protocols are concerned. In my assessment, we have done it really right, and I think we must give a credit to the regulator here, right? And while in China the mobile payments grew without any regulation, right? So Alipay, WeChat built up as a closed loop payment systems, right? And and till now, even the QR codes are not interoperable. The China is still trying to make them interoperable, and now it's so difficult because the entities have grown up so big. I think the credit goes to RBI that right from day zero, I think the DG spoke about it. Interoperability has been a basic design principle, first principle, if I may call so, while designing the payment system, and somewhere UPI got the benefit of that. UPI got the benefit of that design principle because whatever we wanted to do at that particular time, the RBI kept on asking the one question that how do you deliver interoperability? Whether it's a in-app call, whether it's a QR code, scan and pay payments. So everything which RBI kept on asking while giving us the approval in 2015-16, the whole design actually had to adopt the interoperability as a design principle. So I think it got benefited, and somewhere I think India has done a brilliant job to ensure that there is a level playing field for every bank and non-bank that participates in the payment system. And UPI is just one example I gave, but when you look at toll collection, when you look at the transit, when you look at the Bharat Bill Pay, I think there is a complete level playing field which has been created for all participants in the payment system. So somewhere I think India has done a great job in designing the payment systems, and obviously there are some issues which will keep coming because every high accelerated growth brings in its own challenges, and I think we are in the process to solve that. The second question which you asked is the feature phone versus the smartphone. See, in my assessment, I spoke about it before, and I think the way now we need to look at is not whether it's a feature phone or whether it's a smartphone. I think how do we develop that channel, right? I think that is the way we'll have to look at from a design and technology standpoint. So when we look at the app, right? App is a channel on a smartphone to make a transaction. So when we look at now IVR, right, as a channel, right? Can the IVR-based payments, irrespective of the type of the phone customer is using, can we make it popular? I think that's the question we need to ask ourselves. And if we address that efficiently, right, if the customer is able to make the payments irrespective of the phone which is using, whether it's a missed call based, whether it's a contactless payments, whether it's a IVR based payments, I think that is where we want to reach as a country. So that then it becomes again, whether it's a feature phone, smartphone, again, as the country evolves, country progresses, it will convert using the PLI scheme or any other scheme government has launched. But can we deliver an efficient channel to the customer, irrespective of phone which is using? I think that is what our effort is. And again, the use of AI will drive that in our assessment.
Thank you. Last question, Leora. What is your reaction to the Indian experience on financial inclusion and leveraging the digital technology? So what are the key takeaways for the other countries you think might be there? So I was told this morning that even US is interested in UPI. I don't know, Dilip can confirm that. Somebody told me that United States has made some exploration on how India is doing. Now, do you think the India stack model, the NPCI technologies, they have scope to further financial inclusion worldwide? They can be popularized? Or do you think the space is just too crowded with UK, China, Singapore, to name a few, also offering technologies and stuff?
So there are many countries, especially even lower middle income, low income countries that face digital identification, electronic verification challenges. That's one aspect of India Stack and UPI, which could be important lessons for other countries. In addition, and I've always liked the analogy of India Stack as a multi-tiered cake, where you have the base layer of public investment in the physical and the regulatory infrastructure, the top layer, the private sector investment and innovation, and sandwiching the prudentially regulated banks. And this is certainly a model that other countries could consider.
Thank you. So before opening to the floor, let me sort of sum this up by saying, I think Deputy Governor was not here, but Dilip Asbe gave a thumbs up to the regulation initiative which has brought India to this stage. And in other senses, I think we have made rapid strides in financial inclusion, especially in bridging the gender gaps. Both women, 77% of the women and 77% of the men now have bank accounts, which is no mean achievement, as Deputy Governor also pointed out. And it's just tremendous achievement, but there clearly is a challenge ahead in terms of further leveraging the digital technology. The use of digital technology, especially the mobile applications, are still not very large compared to even global standards. If you compare the same per capita income levels between India and the other countries, we are probably a wee bit behind on those fronts. in terms of the usage, not in terms of technology, which has been, I think everything possible has been done to deliver the technology. I think gradually it should improve. With that, I'll open the floor if anybody wants to say. Any questions? Even the World Bank people are welcome to ask the questions here from the floor. Something. So I think there are no questions. I think we're pretty clearly all the issues were discussed in those respects. So let me just close the panel discussion and request Leora to make her presentation to wind us up. I think Deputy Governor has a flight to catch. So thank you very much for coming all the way and joining this important discussion we had. We are grateful to you for this. Thank you. All the best.
Sorry I couldn't be here for this, but yeah, I'll miss this. Thank you.
Another opportunity.
So Leora, you can start the presentation. I'll be back in a minute.
Thank you. So thank you again for the invitation and for arranging. Yes.
I think I'll go there
okay.
because I can't see.
Well. So I greatly appreciate the opportunity to present our new data. For the past decade, with this financial support from the Bill and Melinda Gates Foundation and the MasterCard Foundation, in collaboration with Gallup, we've interviewed over 500,000 adults on their financial lives, including in October 2021, we interviewed 3,000 adults in India in 11 languages, nationally representative at both the country level, and also randomly selected within the household, which allows us to look at differences by gender, by age, by education. And so there are three thematic main messages that in the context, I'll summarize in the context of India. So as we discussed on the panel, by leveraging the digital Aadhaar ID numbers, the JBY accounts led to a surge in account ownership in India, in addition to recent introduction of mobile money accounts, and it has driven account ownership in India to about 80%. However, challenges still remain in the usage of these accounts, although India Stack, UPI, and other innovations are showing great potential. India has today no significant gender gap. Women are as likely as men to have an account. However, we do see a 17 percentage point gap in the use of accounts. So women are far less likely than men to use their accounts, for example, to send or receive a digital payment. We also see in India, like in many countries, that social distancing restrictions during the pandemic, mobility, social distancing restrictions, as well as a perception of cash as unsanitary, led to a mass adoption of digital payments. That 127 million adults made their first merchant or utility payment directly from their account during the pandemic. And so globally, 76% of adults today have an account, 71% of adults in developing countries. That's a 30 percentage point increase over the past decade as financial inclusion grew on policymakers' agenda and there was global commitment to expanding access, equitable access to accounts. In India, account ownership increased from 35% in 2011 to about 80% over the past 4 years. Mobile money accounts have increased from 2% to 10% of adults, although many of these adults also have a bank account. There's still room, as we see, actually throughout Southeast Asia, as well as Sub-Saharan Africa, as well as countries like Bangladesh and Paraguay, where mobile money accounts can really have an impact on providing accounts to the marginal adults, those who might be too far from a bank or unable to open a bank account themselves. And as I mentioned, we really have seen an equitable growth in account ownership in India. And so today, in 2011, there was an 18 percentage point, men were 18 percentage points more likely than women to have an account. JDY, again, probably would have been, without the digital at-heart numbers, it probably would have been an insurmountable challenge. Offered accounts to women, as you see on the right, to poor adults, to rural adults. And today, we really see equitable ownership of accounts. Being just a numbers game, being a very large country, India is home to 230 million unbanked adults, the highest in the world. And almost 80% of the unbanked say that they were to get a bank account, they couldn't use it without help. This is important to recognize. These are more vulnerable, potentially more vulnerable account owners by depending on someone else, including an agent for help. They're more susceptible to fraud, to illicit fees. We ask the unbanked, the beauty of the demand-side surveys, we ask the unbanked, why don't you have an account? And so we hear in India about 40% say the bank is too far away, a little less than that say banks are too expensive. And these are both challenges that fintechs, often offered by local bank and mobile agents in the local village, often offer more affordable and convenient services. We also hear from the unbanked that they're simply uncomfortable going into a bank branch, and often the agents are someone they know, someone they may be more comfortable and trusting to help them with their financial transactions. We also, as the Deputy Governor mentioned, find that about half of all unbanked adults in India report having their own mobile phone, which again raises the potential to offer digital accounts that potentially, again, are more accessible and affordable.
Sorry, just a clarification. This is with respect to conventional bank accounts, or this is with respect to digital, that 70% feel that they cannot use the account without help?
So that's a great question. So this question, using it without help, is we ask the unbanked, if you were to get an account at a bank or other financial institution, could you use it without help? And so about 80% in India say they couldn't. And so the... And so, we know we have evidence, my colleague Chavi Ginny has done wonderful mystery shopper studies around the world showing that, less educated, poor adults and women are often not offered the best service. Agents often charge illicit fees. And when you depend on others for help, whether it be a family member who needs to withdraw your money for you because you don't know how to use the ATM yourself, or an agent or other person, you're more susceptible to fraud and abuse, financial fraud and abuse. India also has, quite uniquely, the largest share of inactive accounts, as I mentioned. In the rest of the world, most people with an account are using it. Accounts are often expensive. Only 3% of adults globally, excluding India, have an inactive account. Whereas in India, about two-thirds of accounts, two-thirds of 34%, two-thirds of adults don't have, about a third of accounts are inactive. And we also, more men with an active account than women say the reason they do not feel comfortable using an account by themselves as one of the reasons. And we actually asked, only in India, we asked people with an inactive account, why aren't you using your account? And we find that about half of adults with inactive accounts say the bank's too far away. I'm not going to pay the fee to use my account. Also trust, which we know is highly related to people not understanding the fee structure, having unexpected bank fees. And about 30% saying they just don't have the financial capability or confidence to use the account themselves. For example, I've had the pleasure to pilot the FINDEX questionnaire to make sure people understand the questions, to understand why people are giving the answers they give in over 30 countries around the world. And I've piloted a number of times here in India. And we met a woman outside of Mumbai in the peri-urban area who spent 50 rupees every month taking the bus to the city to pay a 500 rupee electric bill. And this was and she had her own account, but yet she didn't feel comfortable using it. She didn't have the confidence or the understanding to use her account herself to pay that bill. So now let's look a little bit at the use cases. We find that it's important to note, we conducted the survey in October 2021, and we asked people about, did you make or receive a digital payment in the past year? And so this was after the initial wave of COVID relief payments were made. So, asking people between about October 2020 and October 2021, did you make or receive a digital payment? In India, only about 35% of adults, a little less than half of account holders reported making one. And that number is far lower than in many other large developing economies. But what is really notable is that almost 40% of adults report opening their first account to receive a digital payment. And so, we do see the importance of the government, the private sector, digitizing their own payments to drive financial inclusion. I guess we also, now to unpack that number a little bit, we find that about 20% of adults in India received at least one payment from the government during that time period. About half were paid into an account. It is notable in India, and the light yellow bar, which is people reporting using other methods. When we piloted, we heard a lot about in-kind payments, grain or other in-kind government support. I will add that there is a lot of World Bank research suggesting the benefits of cash of monetized social support payments. And I want to really highlight in each of these slides how digital payments is far more than just a convenience. How, for example, when the government digitizes their own payments, there's strong research suggesting that for the government, it's not only cheaper and more convenience, it also reduces leakage and corruption. The money is more likely to go to the intended recipient. And for the recipient themselves, often it's their first step into the financial sector. It makes almost 40% of adults open their first account to receive a digital payment from the government. And it also, there's evidence from around the world that especially giving a woman her own account leads to greater household spending on education, healthcare, and nutritious food. We also find relatively low percent of adults in India saying they receive a private sector wage, and an even smaller percent saying it's paid directly into an account. And again, this is smaller from other big economies. This also is, reflects some of the issues around formalization and taxation. But we have seen in other countries, especially, for example, I've been doing some work in Bangladesh where suppliers to global value chains in the garment industry are digitizing their payments. Their ultimate buyer, the large brands, are often demanding it as to have the electronic trail of fair wages. And what we're finding is that for the workers, especially the women, being paid into an account gives them greater privacy, security, and control over their money. Women, in a randomized control trial, we gave workers accounts and then moved some of the workers from cash to direct deposit of their wages. And we found the workers receiving electronic wages saved more, made fewer impulse purchases. They were less likely to go hungry at the end of the month and manage their financial risks. And quite importantly, they built up their financial capability. They reported being able to make transactions such as domestic remittance payments themselves directly from their phone without help. They reported being able to use an ATM machine on their own. And so they became savvier financial customers. When we spoke to some of these women, a garment worker said to me, "My mother-in-law waited outside the gate for me on payday, now she can't." And these women very quickly understood the importance of an account for their financial independence. We also...
on the previous slide,
yes.
This is basically the private sector wage payments cover basically the small and medium enterprises, the informal sector sort of thing.
That's a great question. I don't know. Right, so we ask people, do you receive a wage payment? And then we say, is it from the government versus the private sector? Certainly many of these employees might be at informal businesses, and that's why they're being paid in cash. But increasingly, a large number of private sector employees are working, especially, you look at garments, footwear, working for suppliers of global value chains. And that's, for example, one case where wages could and should be digitalized.
puzzled with the low number which India has, even compared to the other countries. I don't know really.
So informal workers might not think of themselves as a wage worker, working a 9-to-5 job. We don't explicitly ask for, do you work full-time work? But there's other, the Gallup questionnaire, these are primarily full-time wage workers.
But anyway, it's, yeah.
On the previous slide, when we looked at what is the DPD gets loan, the 20% number appears smaller too. Right. Because we had looked at what is the unique Aadhaar and unique IEPF accounts are receiving the DBT from the government, and this is once a year. Right. So annual data might be at least 50-60% more than the number which is appearing. Maybe, but it's an interpretation issue.
Yeah, no, something else that might be going on, and we were talking to the local vendor, is that after the large number of COVID relief payments that were made in spring and summer 2020, it was very salient to people in October 21 that they didn't receive another COVID relief payment that maybe they were expecting. And so maybe, so we may be picking up people, very salient to them that they didn't receive that payment. And so now looking at how people make payments, and so here too it's a relatively low number, although we do see over 100 million adults in India reporting making a merchant payment using their phone or a card, with a large percent, about 8 out of 10, doing so for the first time during the pandemic. And this really speaks to the digital readiness in India, how the India Stack, the UPI, that when it was, during this period, it was also a lifeline to small businesses, even informal businesses, during the pandemic, which allowed curbside pickup and other digital payments, which allowed these businesses to survive the pandemic.
So what is the difference here, that this number for China is 82% and for India it is 8%? I mean, what is driving this difference?
You're looking at China versus India. It might be there's a longer history of Alipay and WhatsApp. As I mentioned, these are closed-loop products, and really the hope is that the interoperable systems being developed in India will take off. I mean, I was just talking earlier with colleagues on what is that tipping point that a merchant, in China, you can't buy noodles on the street today in cash. You can't pay a taxi driver. And so the ecosystem developed that a customer will go to a different store if the first store doesn't accept the digital payment, and a merchant won't accept cash. And the way to create that ecosystem is providing the benefits of digital payments, even in light of the costs. And so, what are those benefits? Certainly the benefits to customers is the safety, if not walking around with a wad of cash in their pocket. Certainly for the merchant, there's a whole host of potential benefits, everything from inventory management to working capital credit. And so once the ecosystem develops, that is when perhaps the turning point happens.
Dilip, any insights on this? Why this difference could be so large on the merchant digital payments?
So about 250 million digital, right? And you could assume that UPI if UPI is 250 million, another 150 million could be the Aadhaar and the cash out, assisted mode cash out usage. So about 400 million it should come in my assessment at a high level, who are using the digital the payment system actively. Obviously not the digital. Digital could be it could be 2/3, 1/3 is my assessment. 2/3 could be on digital, and 1/3 could be on assisted or non-digital cash-based payment systems.
So that means the India number should be closer to 22% or so.
That's what it looks like to me. I mean, I don't know.
I'm sorry, closer to what?
Like from his UPA data, what he's saying is that
250 million are using the
250
digital.
million should be. So on 1,400 million total population, this should work out to be roughly 22%.
No, adult. I mean, I'm just saying it's adult population.
Oh, this is adult population.
So it should
correct,
be higher.
Correct. Yeah,
be higher.
should be higher than that. Actually, should be higher. So 1038 million would be the adult population given the number they have on 15
So
plus.
it should go to 25%.
So it's about 20%. I mean, there is certainly double counting between
Could be.
the two platforms. And we do see, we see this, and do some work in Indonesia, that people who have access to the digital payments platforms tend to use multiple platforms. So we're finding about 20% of adults have told us in the past year they've used their phone or a card. But I very much appreciate to follow up the conversation with understand the supply side data better. But certainly the message is that there was this digital readiness in India that allowed adoption during the pandemic. And even more impressively is around utility payments. So we asked people if they've paid a water, trash, or electric bill in the past year and how they made that payment. And virtually all of the adoption of payments from an account were adopted during the pandemic. And here too, it's really far more than a convenience. So for example, there's DrinkWell, an Indian supplier of clean drinking water, which moved their collections from cash to digital and reported reduction in collection costs from 20% of revenue to 2% of revenue. There are examples in Africa. One that we've looked at, a consumer sanitation company that decreased their operating expenses by 20% when they moved from cash to digital, passed on the savings to consumers. And there are just all sorts of sustainable, greener, pay-as-you-go electric models that depend on digital payments. And again, this is not only a demand side, this is also a supply side. The utilities have to accept the digital payments, and especially since many of these utilities are public. It's another way that the government can help develop the ecosystem by encouraging, incentivizing the electronic payments. And we also know that online payments is related to on-time payments. So it's really good for the overall ecosystem. So you to look at some other use cases. Savings since the inception of FINDEX is relatively low compared to some other large economies. Overall savings rates are relatively low. About only 9% of adults in India tell us that they save for old age. And certainly once the ecosystem is developed, there are all sorts of opportunities for auto deposit into savings to relax a little bit of the mental accounting required for savings. And again, why it's important, especially for women, for example, to have their own account, is to have some, to allow women to save in a safe place outside their home, her own money. I'm going to look at borrowing. About half of adults in India report borrowing, although most is from family and friends. Only about 30% of adults report using a formal financial institution, including regulated microfinance institutions. It is important to note that about a quarter of adults, that's about half of borrowers, say that they borrowed for health purposes. And again, this is following the pandemic, but yet that still is a relatively high number. How can the development of various insurance and savings products help people better manage their health emergencies? And so here's a picture that with the necessary caveats that people who receive a payment are different from the general population. But let's see that population as an opportunity. So people who have money coming into their account, how do they use their account? And so globally, 83% of adults who receive any kind of digital payment also made a digital payment. So there's an extra step necessary to deposit money into your account. But if you have money coming in from the government, from an employer, from family living elsewhere in the country, certainly overseas, it seems like a bigger opportunity to help people use their accounts. And so, although we do see much higher than the general population, there's certainly additional opportunities, especially around using the accounts for digital payments. And here it's normalizing in millions the number of opportunities, so the 230 million unbanked. Where are some opportunities of unbanked adults receiving cash payments? Here for government payments, I excluded those who reported receiving payments in kind. The numbers aren't huge, with the exception of the private sector wages. But there are bigger opportunities to increase usage of accounts. So for example, not only are there, you see about almost close to 80 million account owners receiving private sector wages in cash, about 50 million adults who have an account who only received or sent remittances in cash, about 160 million account owners who are only paying utilities in cash, and the number that's literally off the chart, over 650 million banked adults in India who report only making merchant payments in cash. And again, these are literally huge opportunities. So let me finally talk about some new data we collect on financial resilience. Can we talk about why ultimately does it matter? And so access to digital payments has been shown to be linked to higher resilience. You're able to get money from a wider social and geographic network of friends, but also I would argue for the importance of auto deposit savings and other, having an account enables you to safely save your money. And so actually it was here in India where we've been asking this question for 10 years. The FDIC and the Consumer Finance Protection Board in the US asked this question, in 30 days, could you come up with extra money in 30 days for an emergency? And we asked it's about 5% of GDP per capita, so it's 350 rupees here in India. And so a woman kept telling us, oh, I'd ask my sister. Until finally I asked the follow-up question, how likely is it that your sister will send you the money? And the woman would say, oh, very unlikely. Our husband would never let her send me the money. And so we added this, or men would say, I'll get extra work. And I'd say, how likely is it you could find extra work? Oh, very unlikely. And so we asked the follow-up question, how likely is it you can get the money? The comparator global numbers are in the report, but South Asia looks relatively less financially resilient in terms of both the percent of adults who depend on family and friends, social networks, which just aren't all that reliable, or depend on finding extra work, which again, this was asked in the post-COVID period, might have been harder to find. We also find unusually in India that about half of adults who say they would use their savings say it's very unlikely they could come up with the money. And that also reflects the relatively low formal savings rates. And so only 31% of adults in India say they could confidently, with only some or no difficulty, come up with 350 rupees in 30 days. And women are 14 percentage points less likely than men to say that they could. And globally, we find that adults with savings, in formal savings, are most likely to turn to it when they need help. And this all really points to the importance of formal financial products to help people build financial resilience and help them in times of need. And so I guess leave you with, where are the transformations that can encourage account both ownership and usage? What the panel and the Deputy Governor have been talking about, the importance of mobile and bank agents to expand access to financial services, that the digitalization of government payments, of wage payments, the digitalization of the encouragement of merchants to accept payments, which certainly the UPI, I would expect to see very dramatically different numbers in 3 years when we collect the data. And finally, how can we help adults, especially women, move the savings from their home into a safe place? And that's again where once we digitize payments, auto deposit savings has great potential. So thank you very much. I very much look forward to your questions. So
thank you. It's really an excellent presentation.
And just finally, before you close, thank you. I strongly encourage you, all of the data, including the individual level data, is going to be put up in another week or so, is available on our website, along with a note. The first special feature note we wrote was on India. It'll be published later this week. So I strongly, I hope you'll go to the website to dig into the data yourselves. So thank you.
Great, thanks. Any questions from the floor to her? Lauren, would you like to give a Brazilian? Okay, there's some question and then I'll come to you.
You mentioned how China's payment system is possibly more deeply ingrained in the payment system and such. I wanted to understand what is their what do they charge for these transactions, and how different it is from India's case, where it's more or less a public good at the moment?
So that's a longer answer, and financial services are variable. Alipay and WhatsApp are the two large payment platforms in China. As I mentioned, they're not interoperable, but they're virtually ubiquitous now in the country. I would need to get back to you with more specific information. I know it is bundled, so I mean, costs are variable.
Okay, so bundled charges
not a
are there.
public
So she's saying bundled payments. Yeah, there's some more question.
Hi, Leora. This is Sabina from IFMR Lead. Firstly, congratulations on the report and some really wonderful statistics there, not very dismal on the gender front. While we were going through these statistics, the gender statistics also, do you think that since the report came out at a very crucial time when the whole world was witnessing the pandemic, so some of these figures may have had an impact because of that? For example, like we see the savings to be around 24% that you just showed in your, is it just because like the savings behavior has increased? What you kind of foresee is that, is there been a change in the saving behavior, or is it because like I could afford to save because I could not afford to spend it elsewhere, right? Is that something that you would want to comment on the statistics that we have seen so far? Is also applicable to some other statistics. But also very happy, and the second part, I think what I want to say is that very happy to see the section on resilience and financial well-being. I'm very happy to see how the discourse on financial well-being and social protection is moving. But so far, I think a lot of discussion has been on the individual well-being. Whereas there are so many enterprises and segments, segments like the enterprises or small businesses that also the financial health and well-being needs to be considered. So is that something that we can expect in the upcoming reports, is what I would want to know. Thank you.
No, thank you. And to answer your second question, my colleagues at the World Bank collect the enterprise surveys, which focus more, my colleagues at the World Bank collect the enterprise surveys, which focus on small businesses and also in some countries in the informal sector. To answer your first question, absolutely. 2021 was not a normal year to collect data. And it affected, I'm sure, a number of statistics. So for example, in resilience, after the pandemic, asking your family for, COVID was a systemic shock, right? And so your family and friends also suffered. They were less likely to be able to provide that social insurance. Although I would argue that extreme weather events and many climate-related events are also systemic shocks. And more generally, in addition to pandemics, we should be cautious about depending on social networks for financial resilience. May also affect, for example, just reporting having an account. If you lost your job during the pandemic and you only had your account to receive a wage payment, you may not think of a transaction account as your personal account, and you may say you're unbanked. And in addition, savings rates, not surprisingly in a number of countries, especially those hit harder by mobility restrictions, especially those where informal business owners had their businesses restricted during various lockdowns, did report worsening financial situations.
Thank you. I think we had a great discussions and insights from experts in this area. Thank you, Leora, for coming here, which really has generated so much interest among people who matter. I mean, people who can further financial inclusion in many ways. So I think that's one important sort of outcome of your visit. And we hope you would be back at some stage, maybe next time in Mumbai, or where we can also leverage on more technology and more sort of financial, it's a financial capital in some sense. So I will also like to thank my colleagues who have actually labored pretty hard to get this going logistically wise. And I see a few of them here. Sudesh is here, Anil is here, Anupa is there, Kushvinder is there. So thank you all who labored for this. I think Grish, Piyush, his team did that. We hope to have more discussions, whether sometimes on the webinar or which will be easier in many respects. But I thank you all for coming to NCAER, and this has been a great event. Thanks also to the Reserve Bank for responding in many ways to help this event out. And their presence has been great, and I think there will be some insights to take for the policies as well. Thank you. Thank you, Dilip, also for coming here.